Hello friends, we'll be discussing an illustration which will be related to the comprehensive problem of non-manufacturing entities, whereby we'll be preparing the trading account, we'll be preparing the balance sheet and the profit and loss account along with it. Now, when we think about preparing the balance sheet first, we understand that there are certain adjustments. Basically, we are preparing a final accounts. Hence, whatever details we prepare in the normal preparation of final accounts, be it the trading account, be it the profit and loss account, or be it the balance sheet here, similar to the partnership firm, similar to any kind of organization or any kind of company accounts, the same way we have that structure here, which is modified a little bit for non-manufacturing entities. So when we speak about non-manufacturing entities, basically we're talking about a non-profit organization, or rather we can talk about something which is just providing services here. Now, on that basis itself, we'll be solving an illustration based on that criteria. So let's start with the jotting of points first, or rather we'll write down the illustration for you and then we shall go ahead with the explanation and preparation part of it. Now, the question that we are dealing with refers to Mrs. Gavaskar company, which is based in Bombay. So it gives out the details of its trial balance, which we have mentioned down here. Let's read it out for you. Now, when we talk about the trial balance, we have all the details of the trial balance here. The first thing that we have mentioned here is cash in hand and cash in bank balance. Cash in hand is 14,000, cash at bank is 26,000 as mentioned. The next one refers to debtors, which is 8,60,000. And the opening stock, which is mentioned as 6,20,000. Now, debtors again will be a part of balance sheet. Opening stock will be a part of trading account here. So we have to phrase them according to that. Next is furniture, which is for 2,14,000. Office equipment has been mentioned as 1,60,000, and building, which is an asset, has been mentioned as 6 lakh rupees. Motor car, another asset which has been mentioned at 2 lakh rupees or valued at 2 lakh rupees here. Creditor balance, as mentioned, on the credit side is 4,30,000. They have also taken a loan from Vishwanath, which amounts to 3 lakh rupees. Provision for bad debts they have mentioned as 30,000 balance. Purchase is 14 lakhs and purchase return is 26,000. That means in trading account, this will be subtracted from it. Similarly, sales has been mentioned as 23 lakh and sales return has been mentioned as 42,000. Rent from godown is 55,000 as mentioned. Interest on the loan which has been taken has also been a part of this trial balance. The amount that they've mentioned is 27,000 here. Now, other P&L expenses, rates and taxes has been mentioned, which amounts to 21,000. Now, the discount allowed to debtors is 24,000. That means this is an expense for us. Just below that, we have discount received from creditors, which is 16,000 in total. The next they have mentioned is freights on purchases, which is 12,000 rupees. Now, let's go on to the second part of this trial balance. Carriage outward is 20,000. Drawings which has been done during that year is 1,20,000. Printing and stationery comes to 18,000 rupees here. Electricity charges comes to 22,000. Insurance premium paid for that year is 55,000. General office expenses, which will be a part of P&L account, amounts to 30,000 here. Bad debts amounts to 20,000. Bank charges has been given as 16,000. Motor car expenses has been mentioned as 36,000. Capital balance, this will be a part of balance sheet which is mentioned as 16 lakh 20,000, in which the net profit or net loss will be added or subtracted. And salaries has been mentioned as 11, or rather we can talk about salaries has been mentioned as 1 lakh 10,000 in total. The total of this trial balance comes to 47 lakh 22,000, both debit and credit side. Now this is just the trial balance what we have mentioned. The next part of the question that we are going to mention is the adjustments. So once this has been completed, let's go ahead and jot down the adjustments part of it. Now, the question also takes into consideration the adjustments that are supposed to be a part of this illustration. So there are basically 6 adjustments that we have mentioned and which will be a part of this specific problem. Now, we'll first go with the first adjustment that has been mentioned, that is depreciation on the assets. Now, when it comes to depreciation, they have to, or rather they want us to depreciate the building by 5% here. Now they want us to depreciate the building which is being used for office premises by 5%, which has been mentioned here. They also want us to depreciate furniture by 10%. They've mentioned additional note for you. So let's read it out. That purchased one steel table during that year. The cost of that was 14,000 and it was sold also for the same price. However, the proceeds that we received, or rather the sale price that we received after selling that asset or after selling that steel table, was wrongly mentioned in the sales account. So you have to make those changes as well. Now, the next part is office equipments, which is supposed to be depreciated by 15%. There's also another note adjusted to it. That purchased a typewriter for 40,000. However, the amount was debited to purchase account here. This is certain note that they've provided us. We have to make those changes as well. And the next depreciation refers to motor car, which is supposed to be by 20%. The next adjustment is value of closing stock, which is valued at 4,40,000. That means that specific closing stock has to be taken care, or rather has to be mentioned at 4,40,000 in total. The next adjustment, rather the third adjustment, is 2 months of go down rent is still outstanding here. That means we have certain outstanding rent which we have to add in our liability. Now, the specific liability that we have to take into consideration, that means outstanding rent, which we have to mention in our balance sheet on the liability side. After this, we have the next adjustment for us. In the trial balance, they had mentioned that we had taken a loan from Vishwanath. Now, there is an interest which is supposed to be paid off on this loan, which is at 12% per annum. And this loan starts from 1st of May 2016. Now, the reason why I'm emphasizing on the year 2016 is because the financial year that we have to take into consideration is 1st of April 2016 until 31st of March 2017. So, we have to make the necessary calculations. In this specific adjustment, it will be for 11 months. Now, reserve for bad debts comes to somewhere around, or rather stays to be continued at 5% on sundry debtors, which has been mentioned. Let's go on to the last adjustment that we have to take care of. Now, insurance premium, which was paid for 40,000, includes certain details. Now, insurance premium was paid for 40,000, which was mentioned in the trial balance. This includes two specific things. One, that is paid for the proprietor's life insurance policy, and the balance covers the charge from a specific date. Let's read out that date for you. It covers the charge from 1st of April 2016 until 30th of June 2017. That means 3 months after the specific financial year that we are closing. So, this is the adjustment that is mentioned, and this is the least or rather most important critical adjustment that we have to look into. Now that we have completed all the adjustments, it's time for us to prepare the trading accounts. So, let's start with the preparation of trading account first. Now, while preparing the trading account, we'll be taking all the items from the trial balance which are related to the trading account, and we'll be mentioning the adjustments also related to it, which are only related to the trading account, or rather which has certain part to be played in the trading account. So, we'll first prepare the whole trading account for you, and then we'll continue with the explanation of it. Now, for the financial year 31st of March 2017, we have prepared the trading account with us. We have taken all the necessary items, as well as we have taken the considerations of all the adjustments that we have to mention in this specific illustration. So, when we start off with this specific trading account, we have first mentioned the opening stock, which is 6,20,000, which was already given to us in the balance sheet, or rather, it was given to us in the trial balance here. The next item comes as purchases. The base amount has been mentioned here as 14 lakh rupees. So let's underline it. Now, in the adjustments, they had mentioned that a typewriter was purchased, and that specific typewriter purchase amount was mentioned in the purchase account. Rather, it wasn't supposed to be mentioned in the purchase account. Hence, we are subtracting that amount. So 40,000 total will be subtracted from it, and the next item that will be subtracted from it will be purchase return, which is 26,000, as we had discussed the same thing while we discussed the whole illustration with you. So the balance that comes out after deducting these many items is 13,34,000, which is the net purchase amount here. Now, the next item which will be a part of trading account here is the freight on purchases, which has been also mentioned on the debit side as it is a direct expense. Total of 12,000 has been mentioned on the debit side related to it. Now let's go on to the credit side, whereby we'll have sales being the first part. Gross sales amounted to 23 lakh, which has been mentioned. Again, in adjustment, we had certain sale of old steel table. What we had, 14,000 was the amount that was sold off for, and that was included in the sales account. It wasn't supposed to be included in the sales account. Hence, we'll be subtracting that amount first. After that, we have the sales return, which is again supposed to be subtracted. Amount is 42,000. So the total amount that comes outside is 22 lakh 44,000, which is the net sales amount that will be taken into consideration. And the last part of the trading account is the closing stock, which is 4 lakh 40,000. Now that all these things have been mentioned, let's tally this amount, or rather let's tally this account and figure out what is the gross profit or whether we have a gross loss in this situation. Let's start with that. So we'll prepare the interim balance first, which will be mentioned in green highlighted. So as you can see that the debit side interim total is 19 lakh 66,000 and the credit side interim total is 26 lakh 84,000, which clearly states that credit side is more as compared to the debit side. Hence, we'll have a gross profit situation here. Let's figure out how much is the gross profit that we have to take into consideration. Now, the tally of this specific trial balance, or rather this specific trading account, will be 26 lakh 84,000, out of which the interim balance of the debit side will be subtracted, and that will be the gross profit which we are looking out for. So the gross profit that we have figured out is 7,18,000. Now this will be moved to the profit and loss account. So let's prepare the profit and loss account now. Now, while we are preparing the profit and loss account for this specific firm, let us mention the gross profit on the credit side first of all, which will be 7,18,000. So again, while we are preparing profit and loss account, we'll take all the items that are a part of profit and loss account along with all the necessary adjustments, and then we'll go ahead with the explanation of this. So let's complete the whole profit and loss account first. So we have prepared the profit and loss account, but before we could jump on that, we have certain working notes for your reference. Now, the first working note refers to certain details that we have already learned in the adjustment. So let's start with the working note first. It refers to the insurance premium adjustment. Now, in the trial balance, insurance premium was paid around 55,000, out of which 40,000 refers to the personal liability, or rather personal insurance of the proprietor, which was mentioned in the adjustment, and it covered from 1st of April 2016 until 30th of June 2017. That means 15 months tenure has been covered under 40,000 rupees. So as we are dealing only with the business insurance, hence this amount that has been paid will be subtracted from 55,000. The balance left will be taken into consideration, that is 15,000 here. Now, as you see that we're dealing with only 1 year of insurance, that means for the next 3 months, we have already prepaid certain expenses, hence that will be subtracted. So that prepaid amount will be based on 15,000. Now, this whole 15,000 covers for again 15 months. That means 1 month will be approx around 1,000 rupees is the premium that we are paying per month. So for 3 months, if we are paying 1,000 is the per month, for 3 months it will be 3,000 in total. That will be also subtracted. Hence, for current year premium that we have paid is only 12,000 rupees. Now, the next refers to the depreciation here. Now, on building, it was mentioned at 5%, which is costing 6 lakh rupees. 6 lakh is the cost of the building. 5% on that will be somewhere around 20 or 30,000. So 30,000 is the depreciation on building. Motor car states that 20% depreciation is supposed to be taken here. So 2 lakh is the cost of the motor car. 20% on that will be 40,000. So that is the depreciation on motor car. Now, furniture, it had certain expenses or other certain adjustments. Furniture total was 2,14,000, out of which 14,000 refers to something which has been taken in the sales entry. So that has to be subtracted. So whatever amount is left on that, we have to take 10% here. So on 2 lakh, 10% will be 20,000. Similarly, office equipment balance was 1,60,000. We had purchased certain office equipment which was for 40,000. That was the typewriter that has to be added there. And on total of that will be taken at 15%. So that will be again 30,000. So total of all the depreciation comes to 1,20,000, which has been mentioned in the profit and loss account. Now the next one is provision for bad debts, that is 5%. Provision always has a credit balance, hence the balance of provision will be mentioned on the credit side of the T account. Again, the new bad debts or sundry debtors which was supposed to be mentioned, the new bad debts has been already mentioned as 20,000, that will be on the debit side. Now, apart from that, if you see that currently we have to give 5% provision on the sundry debtors. Sundry debtors is somewhere around mentioned as 8,60,000. On that, 5% will be 43,000. So if the total of debit side is 63,000, total of credit side is 33,000 or rather 30,000 here. So the balance, that is the balancing figure here, is 33,000, that will be moved to profit and loss account. Now that we have learned all these three adjustments, let's hop on to the preparation of profit and loss account. So we have taken the profit and loss account for your reference. Let's start with the salaries first, or rather expenses of profit and loss account. The first item that we have mentioned here is salary, which is 1,10,000. The next one is rent on go down, which is 55,000. 2 months we have to add. Rent has been paid for 5 months. 2 months will be 11,000 in total. Hence, that has been mentioned. So, total rent on go down has been taken only for 10 months as mentioned in the question. So, per month will be 5,500. If 2 months is outstanding, that means 5,500 multiplied by 2 will be somewhere around 11,000, which has to be added. So, total amount of rent comes to 66,000. Rent and taxes has been mentioned as it is 21,000. Discount allowed has been mentioned as 24,000. Carriage outward also has been taken into profit and loss account, which is 20,000. Printing and stationery and electric charges 18,000 and 22,000 respectively has been mentioned here. Now the provision for doubtful debts, as we have already calculated in the working note, has been mentioned as 33,000. Hence it has been mentioned there. Insurance premium also we have calculated in the working note, which is 12,000. Hence it has been mentioned here. Depreciation, total of that is 1,20,000, which you have calculated in the working note. That the same thing has been mentioned down here. General office expenses 30,000 has been mentioned. Bank charges 16,000 has been mentioned here. Now, when it comes to interest on loan, the trial balance shows interest on loan as 27,000. Outstanding interest is 6,000. The reason why, how it is calculated is, if you see the loan amount, 3 lakh is the loan amount on which 12% interest is supposed to be provided. But now it is taken only for 11 months. So if you consider 3 lakhs multiplied by 12% for 11 months, let's figure out how much is the amount. We'll do the calculation right here on the credit side. So ideally, we're supposed to pay 33,000 as interest on loan, but in the trial balance, it is only given as 27,000. That means 6,000 is still outstanding, which has to be added. So that is how it has been calculated as 6,000. Total motor expenses also has been mentioned as 36,000. Now with this, we have completed the debit side of it. Now that we have mentioned all the items on the debit side, we're supposed to go ahead and mention the items on the credit side now. So the first thing that we've already mentioned is the gross profit. Again, on the credit side, we just have one item, that is discount received. Hence, we have mentioned that same thing as well. Now it's time to prepare the interim balance and figure out what is, or rather which side is the bigger, or rather if we have net profit or net loss situation. So the interim balance clearly shows out that on the debit side we have 5,16,000. On the credit side we have 7,34,000. That means we have a net profit situation. So let's figure out how much is the net profit here. So net profit has been figured out as 1,73,000. Now it's time to prepare the balance sheet, which will be the end of this specific illustration. Let's start with that. So we have prepared the whole balance sheet for your reference. The first thing that we have mentioned here is the capital account. Total balance of capital account is 16,20,000, in which we have added the net profit 1,73,000. After that, we have subtracted the drawings, which is 1,20,000. And after that, the insurance premium, which is for personal thing, has been subtracted 40,000 in total. The total of capital account then comes to 16,33,000. The next item is the long-term liability, that is loan, which is for 3 lakh rupees from Vishwanath, and the additional outstanding loan for 6,000 which has been added to it. So the total loan or liability is 3,06,000. Next item is the sundry creditors, which is 4,30,000 again. And the outstanding rent that we had calculated or added in the total of 55,000 is the 11,000 here, which has been mentioned in balance sheet. Now with this, we have completed the liability side. Let's move on to the asset side. We'll first have the assets and their depreciation respectively. First one will be building. After depreciation, the total amount of building is 5,70,000 because the original cost is 6,30,000 is the depreciation subtracted from it. For motor car, original cost was 2,40,000 is the depreciation, 1,60,000 is the amount in the outer column. Similar for office equipments, we have total of 2,30,000 is the depreciation on it. Hence, the outer column amount will be 1,70,000. Next one will be furniture, 2 lakh rupees. Depreciation subtracted is 20,000. Hence, 1,80,000 is the amount mentioned here. Stock in trade is 4,40,000. That means closing stock. Debtor is 8,60,000, out of which we have to subtract the provision. That means the current provision for 43,000, which we had calculated at 5%. 8,17,000 is the amount that has come out. Next is cash in hand and cash in bank, given balance in the trial balance itself. And the last one is the prepaid insurance, as it is an asset for us, hence 3,000 has been mentioned there. Now it's time to figure out the balance sheet total. Let's see whether the balance sheet liability side is equivalent to the asset side or not. So the balance sheet total comes to 23,80,000, which is equivalent for both liabilities and assets. And here we close this specific illustration. So I believe with a little less adjustments, what we have done right now, we have understood how to prepare the trading account, profit and loss account, and balance sheet for non-manufacturing entities. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.